Flight Centre warns of a massive profit loss. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from news.com.au, which is discussing the massive loss in profits that Flight Centre are warning us all about. Now, Flight Centre is a well-known travel brand, travel agent. Go in there and book your flights. I can't say I've used their services for quite some time, but then, they're still popular. They're still quite large. Let's jump over and have a look. Let's have a look at their share price here. We can see, as of recording, they're sitting about $11.96, so just under $12. Let's jump out to 6 months, and we can see in February, they were at $35, so they plunged down to $8.92. The low, 52-week low, was $8.56. The 52-week high was $44.24. And the dividend yield is 11.45%, which is a lot better than some of the other things we were looking at. But here, we've got international tourism, non-existent. International travel, pretty much non-existent. Migration, non-existent. Flight Centre's going to take a hit. I can't say anyone should be surprised at this. And the question I put to you, is this going to be potentially another Hertz? Another Hertz, everyone. So, Flight Centre warns of massive profit loss as the pandemic restrictions ground travel availability. Troubled travel group Flight Centre has warned the pandemic will cause a massive financial hemorrhaging upon its travel and tourism business. Well, yeah. Troubled travel group Flight Centre has warned investors of a multi-million-dollar loss ahead of its financial results, flagging the pandemic is still inflicting pain upon the tourism-dependent business. I can't imagine anyone is at all surprised. But I mean, would it be something you're investing in to expect a long-term recovery in the tourism sector? Remember when we were looking at an article from ABC about newbie investors getting in, people like buying in the stock market with absolutely no experience, chucking all their money at it in one of the most volatile times in history, and saying, giving this advice like, oh, well, when the lockdowns disappear, everyone's going to want to travel again. So tourism is the best one to jump in. The exact same thing as Hertz. I'm going to look it up. I'll look it up now. Hertz, Robinhood. Have a look here. You can see this is the number of Robinhood holders of Hertz. Robinhood is a free trading app. Everyone on your phone. You don't pay any commissions. And there you go. There's the valuation. So essentially, when the company was bankrupt, they started piling in. They saw this. Oh, wow, look how cheap it is. Look here. That's when they saw, and they just piled in. Piled in. So if you got in at this price, there was probably this spike here when you had a chance to get out, and notice there was some profit taking. And now everyone else, most of the time, you're in the hole. Most of the time, you're in the hole. So, I mean, there you have it. Is that what we're going to see here with Flight Centre, everyone? Is that what we're going to see with Flight Centre? When let's go to the max data here for their charts. There you go. I mean, look at that high, guys. Over $60 at one stage. Over $60 at one stage. And where is that? I'll come back here. The Queensland-based company is anticipating a statutory loss between $825 million and $875 million from direct impact of the pandemic grounding the travel and tourism industry. Flight Centre's expected shortfalls are off the back of the economic downturn sparked by the lockdowns, reducing the value of its assets that will be recorded as impairment charges. The company has set aside $110 million for pandemic-related costs, with the 2020 financial year loss a significant reversal of the 2019 profit of $364.3 million. So that's a huge turnaround, guys. Huge turnaround. I wonder what the dividend yield is going to be moving forward. Removing impairment charges caused by impacts of the virus upon its business, Flight Centre is anticipating an underlying loss of between $475 million and $525 million. largely incurred from the company's inability to operate during the height of lockdown measures. Flight Centre Managing Director Graham Turner said the pandemic had been devastating upon the aviation, travel and tourism sectors that underpin the company's operations. Despite ongoing restrictions, revenue has now started to increase, particularly in Europe, and we've surpassed our initial cash flow target, thereby extending our liquidity runway, he said. There are, of course, further challenges to overcome, plus ongoing uncertainty around government, pandemic objectives, and the strategies they will adopt in the near term to counter the virus's effects. See, here's the thing. It's the level of uncertainty in the business community that's resulting from government intervention, one way or another. All the mitigation strategies they implement, they're changing from day to day. It feels like it. You're getting very strict lockdowns. You know, all of a sudden you can open business, boom, then you're closed. People can go out, people can't. People can travel, people can't. Look at New Zealand now. In an update to the Australian Stock Exchange on Thursday, Flight Centre said it had obtained further debt funding to support the business, which equates to an additional $200 million in liquidity. The company recorded a net operating cash flow of $53 million and said it had a cash balance of $1.9 billion. Mr. Turner has also called for greater clarity from government surrounding lockdown measures and border restrictions. Within the travel and tourism sectors, we need to know what the pandemic conditions need to be present in each state, territory, and at a national and international level for governments to ease restrictions, stop lockdowns, and open up borders, he said. But do we know? Has that even been declared? Are we going through an eradication strategy, or are we going through a flattening the curve strategy? What's going to happen? How can you plan business decisions and investments based on the current situation? There's the challenge. There's the challenge that every business faces. And not just big ones like Flight Centre. Small ones too. Small businesses face the same challenges. So this will allow businesses to plan for the future, to prepare to restart their operations, and to bring back thousands of our people who are currently on stand down. So there we have it, everyone. There we have it. Flight Centre predicting a terrible loss, which I can't say would surprise anyone. The market today, it's down 1.87%, so down 20 cents a share, at least at the time of recording. I can't imagine anyone's been too surprised. If we jump back here, let's have a look at, this is what was available on the ASX. So 1.9 billion cash balance as of 30th of June, including circa 1.15 in liquidity. Successfully building a longer liquidity runway. COVID-19 cash burn slowing, revenue above initial projections, costs at targeted levels. So what they want to know is they want to know how they can plan. What do you think? Do you think Flight Centre is a good investment for the future? Do you think there's a long-term potential to make a good return? Or if restrictions can carry on even longer, will the market adjust? As always, let me know your thoughts and opinions in the comments below. Please like, share and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve or Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care everyone, have a great day. I'll see you in the next episode.